Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Doug Krisner. We begin with the simmering tensions between China and Japan that trace back to late last year with comments from Japanese Prime Minister Sanae Takaichi regarding Taiwan. For a closer look, I'm joined by Bloomberg's Garfield Reynolds. He is team leader for Asia Markets Live on the Bloomberg terminal. Garfield joins from Sydney. Thank you so much for being with us. Happy New Year to you. Can you begin by giving me a little bit of understanding the context of how we got here with relation to the tension between China and Japan?
Yeah, well, how we got here is that Japanese Prime Minister Sanae Takaichi, soon after she won her way to office through a parliamentary vote, commented about Taiwan and the idea that Japan might be willing to play a role in as matters develop there, and that brought on an immediate response from China. You're recalling that, of course, China's official stance is that Taiwan is part of China and will always be, that it's not in any ways a separate entity. It has no sovereignty, and of course, these days there are very few countries that recognize Taiwan as a sovereign nation. So that's how we got here. And to some extent, the heat came out of the issue. But now China's come out with this again, and this ramps up what's been going on. And that's part of the reason, a big part of the reason, I would argue, why we're seeing Japanese shares quoted lower today, even as Asian shares elsewhere, in particular South Korea, continue what has been a really stunning start to the year for equities here in the region.
I was struck by the fact that Beijing recently banned exports of what they are calling dual-use goods to the Japanese military. So there seems to be implicit in all of this the real risk of some type of confrontation, or is it merely saber-rattling, do you think?
I think it's more saber-rattling, and very much, Beijing seems to be acting on the basis that it doesn't need to directly, physically, as it were, threaten Japan. Rather, it can hit Japan through its economy. Last year, it discouraged Chinese tourists from going to Japan, and that was definitely something that could do some damage to Japan's economy. We saw a number of tourism and also retail-related equities in Japan underperform precisely because of that.
You mentioned a moment ago, Garfield, the positivity that we're seeing in the South Korean equity market. I would be remiss if we didn't kind of come back to the meeting between Chinese President Xi Jinping and South Korean leader Lee Jae-myung in Beijing. Help me understand the importance of this meeting and how it may be reflected in some of the price action that we're seeing in markets.
South Korea's new president, relatively newly minted president, took over after the previous president was ousted over what was seen as some authoritarian moves there. And so the new president's been doing a pretty decent job of navigating some difficult waters between, the U.S. on one side and China on the other. On the one hand, the U.S. is a long-term ally of South Korea, and yet President Trump had imposed tariffs, complained about the trade surplus, so Korea mostly seems to have gotten him on side. Meantime, they've also been working hard to get China back on side. There was I think there still is a Chinese ban on some cultural exports, as it were, from Korea, movies, videos, music, which doesn't necessarily do a lot of economic damage, but is not a good look from the Koreans' point of view. So they're very eager to work with China to get them on side along with the US. And although there's no sort of direct idea that Korean shares are rallying because of China diplomatic efforts, there is an argument to be made that part of what's helping South Korean equities outperform is that they are seen as being a strong AI/tech play that is not necessarily tied to one or other of the US AI/LLM streams. So Nvidia versus Google, as it were, architecture there. South Korean companies plug into both. They also have some exposure to China's AI boom and what's going on with DeepSeek. So we're seeing the Kospi dramatically outperform US equities as the AI-related boom for global stocks extends.
I want to change gears, Garfield, talk a little bit about the oil market today. WTI crude oil right now is down more than 1.8%. In the U.S., Tuesday evening, President Trump said that interim authorities in Venezuela will be turning over between 30 to 50 million barrels of high-quality sanctioned oil to the United States. Now, we know that China is probably the biggest consumer of Venezuelan crude. Talk to me a little bit about what the reaction has been to the developments that we have seen over the last several days in Venezuela, and whether or not the U.S. involvement now in the crude oil industry in Venezuela could be a significant issue for the Chinese.
The impact for the crude markets of what's gone on in Venezuela should be a lower price in crude and a lack of any scope for serious rallies, sustained rallies, because whatever may or may not go on, and reviving Venezuela's oil industry would take plenty of time and money. The simple fact that you have a bias towards more supplies coming out of Venezuela than the trickle that has been coming recently, that adds to the potential for a supply glut. So lower crude prices globally is part of what you would expect with the way the Venezuelan situation has been developing. From the point of view of what that means for China, on the one hand, it has been the biggest buyer of Venezuelan crude, and it's Venezuela's biggest creditor. So it's little surprise that China was very critical of the U.S. moves in Venezuela, but it is noticeable that there hasn't been any really heated rhetoric or moves out of China. There's been no sense that, for example, they might impose fresh restrictions on exports to the U.S., such as those they've just touted for Japan. So that signals a couple of things, I think. One is that, of course, China can get crude from elsewhere, and if global crude prices are falling, that means that the cost for China to get that crude is not going to be significantly up. And China had also been stockpiling some crude. So I think the hit to China might not be too huge. China also, of course, has famously boosted its usage of renewables precisely because that's a way of increasing its energy independence. So there is a potential modest hit to China from what the US is doing as far as Venezuela's crude goes, but as I said, probably just a modest one. Of course, it also has no problems getting crude out of Russia, so that could be a help. And there's also, from the point of view of China, coming back to where we started with regards to Taiwan, China does want very much to ultimately absorb Taiwan. And if it looks at what the US has done in saying, well, the Western Hemisphere, Monroe Doctrine says that the Western Hemisphere is the US's backyard and we get to say what happens here. Well, if China again turns around and says, we agree with this sort of thing. In fact, you certainly can't tell us to lay off Taiwan when you're busy, running roughshod over Venezuela. I wouldn't expect China to do anything as dramatic as what's been occurring the last couple of weeks or so with Venezuela, but it does enhance China's capacity to put pressure on Taiwan and to see a path toward, at some stage, absorbing it. So any pain from the Venezuelan crude side of things might be well and truly okay with China when it looks at the longer term, as it usually does, and say, well, this opens up a path for us to have access at some stage to the extremely valuable Taiwanese economy.
And we know that Chinese President Xi Jinping has set unification with Taiwan as one of his goals. Garfield, thank you so much. Bloomberg's Garfield Reynolds, team leader for Asia Markets Live on the Bloomberg Terminal. Garfield joining from Sydney here on the Daybreak Asia podcast. Welcome back to the Daybreak Asia podcast. I'm Doug Krisner. We go to Las Vegas next and CES, the annual event focused on consumer tech. That's where we caught up with Nvidia CEO Jensen Huang. Today, he joined the CEO of Siemans, Roland Busch, to discuss the partnership of these two companies. They spoke with Bloomberg's at Ludlow.
Jensen, we've discussed the five-layer cake often. With Nvidia, it started with the GPUs, but it's now software. The element of simulation. On stage, you talked about integrating the software side in particular into EDA. Again, it's a similar question for you, more of a timeline. What is it that you think you'll do first in how you guys work closer together?
Well, the first thing, let me just say very quickly, we're announcing a big partnership between us. We've known each other for a long time, but the partnership we're announcing is really a big deal. One, we're accelerating their EDA software. We're accelerating their simulation software. We're integrating AI technology, physical AI and agentic AI, into their team center and their factory automation operating system. And so we're working together across this entire spectrum. When we accelerate the software, then we'll get to use it to design our chips and systems. When we accelerate their simulation software, we'll use it in our AI factories to simulate the thermal properties of our AI factories. When we integrate our automation and agentic systems into their AI industrial operating system, we can then use it in our factory floors with our partners, for example, Foxconn. And so we're working across this entire spectrum together, and we're going to put the technology to use basically as soon as we can.
What's the net effect for you, Jensen? Is it improves margins, efficient capital allocation? I know that might sound a bit dry, but actually right now that's the answer everyone's searching for. How has this investment in AI and use of the technology actually changed things in the real world for me?
Well, we announced yesterday Vera Rubin. It takes 6 different chips to integrate into this incredible system called Vera Rubin. And when you're done, each one of these Vera Rubin GPUs is 240,000 watts. And it is 10 times more energy efficient than the last generation. It is 10 times more cost efficient than the last generation. But it's still, the technology is insanely complicated. 15,000 engineering years came together to build this system. And so when we accelerate EDA tools, when we accelerate simulation tools, and when we can eventually, and I'm hoping very soon, design entire Vera Rubin systems inside a Siemens digital twin, the ability for us to create much, much more complex systems will scale. We'll do it much more efficiently. And so this is really about being able to do the impossible and being able to do it the impossible right the first time.
And let me add, once we that realize that AI creates real-world impact, this is where it really deploys the full power and also the economic power. It's not only in the data centers or in the AI factories, which we see, but also on the edge, because once you start inferencing with low latency, you bring this technology to the edge. There's a huge potential for our customers to deploy this technology, and this includes hardware, where we come from the chips. It goes into the controllers. Some of our controllers run on GPUs.
Yes.
And then it goes all the way to the
industrial PC.
Exactly.
Yeah.
And we
now these industrial PCs are AI industrial PCs.
We supercharge it, and they can now run algorithms trained in the cloud. They can run it on the shop floor and do all that trick, what we talked about it in real-time optimization and running in a plant. And that makes a huge difference.
Again,
it drives economic growth.
The question that's being searched for is how is this going to manifest in the real world? The emphasis at this year's CES, I think, is physical AI. is not the manifestation of the final stage of physical AI, just one giant robot that you guys call a factory in the manufacturing context. Is that where you're seeing demand from actual customers? You know, they need a factory that is automated 100% and genuinely autonomous in some degree.
So number one is if you want to build a factory, and very often you're missing out on labor, and we talk about skilled labor. It's hard to find, number one. Number two is once you build it autonomous and automated, then you have a much higher yield, what you can generate. You use less energy, by the way, at the same time. You really optimize it in a way. So therefore, there's a lot of benefits. And if you want to talk about the United States, ramp up manufacturing in the United States, you need to go as digital and as automated and AI supercharged as possible.
A factory is robotic, and it is orchestrating robots that are building systems that are also robotic. Like, for example, a self-driving car is a robotic system. And the reason why it's so hard to deploy robots today is because it's hard to program these robotic systems. The software expertise necessary, the customization necessary is really intense. It's just too much. And so the fact that we could now apply artificial intelligence, physical AI technology to these robotic systems, make them easier to teach. You show it a few demonstrations and the AI learned it by itself.
Would you go as far as to say, Jensen, that you've solved for that software limitation?
That software limitation is the ChatGPT moment of it is now here. I think over the course of the next couple, 2-3 years, we're going to make some really big breakthroughs.
Let's please talk about energy, electricity, power supply, call it what you will. In turn, for each of you, how worried are you about it as a bottleneck? And what is your experience day to day in running both companies in that respect?
Well, energy should always be a bottleneck for any industry. And this is a new industry that's growing incredibly fast. As you know, AI is both a technology that's going to revolutionize many applications, and we're talking about some of them here. But the AI industry itself, the manufacturing of the artificial intelligence takes energy. It takes energy, it takes AI factories. It's exactly the reason why from Hopper to Blackwell, we increased energy efficiency by 10x. From Blackwell to Rubin, we increased energy efficiency again by 10x. And that translates directly to our customers' revenues, because in the case of an AI factory, whatever factory size you have, you're limited by the power. And that power, within that power constraint, you want to have the most tokens or most AI per watt that you can possibly generate. And so every time we improve energy efficiency, we're effectively improving both the AI capabilities for our customers and their revenues, because they're always constrained by power.
That was Nvidia CEO Jensen Huang and Siemens CEO Roland Busch speaking with Bloomberg's Ed Ludlow. Let's stay at CES and turn to artificial intelligence in China. We had the chance to visit with Lisa Su, the CEO of AMD. She told us demand for AI in Beijing is high. Here is Su speaking with Bloomberg's Ed Ludlow.
China is an important market for us. We actually sell a broad range of chips into China, including our PCs as well as, other embedded chips.
In the data center context, of course, sorry.
In the data center context, we are, certainly we see China as an important market. We did get some licenses from the U.S. government, late last year as it relates to some of our previous generation, our MI308, chips. And we are in the process of applying for new licenses, with our, MI325 chips that were, recently, allowed to apply for licenses. We haven't gotten those licenses yet, but we continue to view China as an important market for us.
The reason I ask about it is in part because a lot of the work that's being done in open source models and bridging the gap between open and closed is being done in China to some extent. There's been a lot of discussion about the demand being there in China, but could you reflect a little bit on that demand, but also what the Chinese government's attitude is to you taking a later generation of tech to the country?
Well, I do think the demand for AI in general and in China is high for all the reasons that we talked about. I think we are in a demand environment where more compute is beneficial across the world. We think China is an important market for us, and it's a place where we certainly would have been very active in having our solutions deployed. So, we continue to view it as something that's important. We're working with the U.S. government as well as our Chinese customers, to find good solutions there.
And there are signs from both governments that the license process is moving. Commerce is kind of notorious for things sitting on a desk for quite a long time.
I think we are optimistic that we'll have an opportunity to get some of those licenses granted.
That was AMD CEO Lisa Su speaking with Bloomberg's Ed Ludlow at CES here on the Daybreak Asia podcast. Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.